Hello and welcome to another episode of the Jacob Shapiro podcast. I'm producer Jacob. I really don't have much for y'all today. This is a fantastic conversation between Jacob Shapiro and our friend Matt Pines. They talk about what's happening in the markets. They talk about market opportunities. They talk about doomsday. They talk about China. They talk about agriculture. It's a good conversation. I got nothing else. Stay safe out there. Get offline. Go touch some grass.
Matt, you're a fan favorite, and you're one of my favorite guests to have on the podcast. I have to say this to all guests, but you're actually one of my favorites to have on the podcast because A, I like you, and B, I always learn something from you. So thanks for coming back on. I appreciate it.
Well, you're one of my favorite podcast hosts, and I'm not just saying that to butter you up.
Well, that's nice. Listeners, a lot of you probably can't see this, but I was warning Matt that I have to. There's a whole long story of why I'm in this office today. My daughter has a stomach bug and she had to stay home, and then my wife had to go. Anyway, it's boring, but I can only record from this very specific place in my office right now, and the sun is sort of when it peeks through the clouds is beating down into my face. So I've already apologized to Matt, and if you watch this on YouTube, at certain points I may put sunglasses on. It's not because I'm a douchebag, it's just because literally I can't see. I don't put sunglasses on in the context of this conversation. Matt, the last time you were on the podcast, you had a different role, a different position. So why don't we just start off first? Tell people about the Bitcoin Policy Institute and tell us a little bit about why you made it seems like a pretty big shift in your professional life.
It seems like that in retrospect, but in retrospect, it was inevitable. So my whole professional career has been a series of these sort of step function hard turns. Because I did physics and philosophy undergrad, decided not to do PhD, sort of went to London to do a master's in public policy, came back to the States, worked for the National Science Foundation, thought maybe I would go to law school, hard pivoted into national security consulting for the government for about 10 plus years, really looking at kind of worst case scenario planning, horizon scanning, technology assessment and experimentation. Then went over into sort of private sector consulting, joined a boutique firm doing sort of geopolitical and cybersecurity risk advisory for mostly multinationals, critical technology companies, some venture private equity firms, where I was director of intelligence. And then that firm was acquired by a publicly traded cybersecurity company. And so that was kind of the last era, the last epic. But along the last 5 years, I've had this interest in Bitcoin and the intersection of Bitcoin with these strategic kind of national security and geopolitical questions. And so I got involved with a think tank that got started in 2021, dedicated to that objective, which is to provide kind of a serious, peer review quality research and analysis that's objective, independent, nonpartisan, that can sort of speak the language of DC, right? Sort of translate kind of the in-group kind of canonical lore and sort of the weird shibboleths of Bitcoin to policymakers on the assumption that at some point it will become strategically relevant and it will intersect with a lot of these other instruments of national power. And so I was, a contributing fellow early on to that think tank, the first national security fellow, wrote the first white paper on Bitcoin and national security, and then progressively engaged more and more, as a quote influencer in the Bitcoin space. But because I'm based in DC, I would also brief policymakers and contribute to the think tank's activities and sort of quote thought leadership, yada, yada, yada. But obviously things have changed in the overall external environment and the policy relevance of Bitcoin. And so after the election, I was paying close attention to whether the incoming administration would make good on some of these rhetorical commitments, right? Whether their pro-Bitcoin policy was just a kind of a patronizing pat on the head to their campaign supporters, or whether this marked a more structural shift that would translate down through the bureaucracies and the ship of state being turned decisively in a pro-Bitcoin direction. Was a key question in my mind, and so I was assessing that over the course of the wintertime. And then BPI as a think tank took a hockey stick up in terms of its ability to influence policymakers and our overall sort of impact. And so sort of the timing was right to sort of jump in as executive director, where I feel like the leverage points to kind of shape good outcomes long term, now that the government, at least at a rhetorical level, is committed to these things, how to sort of maximize the strategic upside and minimize the downside risk here. And I'd also just like working with a small team. The vibes are immaculate. We're, building something from scratch. We have downtown offices. We're going to be, kind of building like essentially a Bitcoin embassy. And it's just fun, right? It's just really fun to kind of engage in these things and not have to be a PowerPoint monkey delivering the same China bad briefing to corporate C-suites that increasingly don't care. So that's been fun. And then along the way, as my life, increasingly took, you know, weird twists and turns, almost the same week, I decided to kind of jump in as executive director at the Bitcoin Policy Institute. I was approached by folks that were starting essentially a uh, a very serious effort to try to collect data on unidentified anomalous phenomenon. So I joined as a strategic advisor to Skywatcher, which is staffed by folks with very relevant professional experiences and background in these sorts of activities. And so that's been a whole separate thing, right? Which is the more exotic flavors of my professional interests now converging. Um, and yeah, so that's what I'm doing now. It's never a dull moment.
I believe it's never a dull moment. By the way, the vibes are immaculate. I'm going to fight with the podcast producer to make that the title of the podcast. It doesn't get much better than that. Um, I would imagine though, like at least in that there would be demand for the types of old briefings that you were doing, because I mean, China's never been badder from the U.S. perspective, or maybe not. Maybe there's going to be a U.S. China trade deal in 3 months because apparently Trump is talking to Xi, he's not talking to Xi, things like that. So I mean, I assume your old colleagues are also up to their ears in this stuff. Is that correct?
Yeah, no, I still talk with them quite regularly, and though I would say one observation that I had, leading into this year is just the demand for specific types of consulting services that require C-suites to, change their budget outlays on consulting services are just like the market for those services you would think would be on a bull trend, but it's actually, I think, been more on a bear trend. I think there's pockets where you can still demonstrate value, but at the end of the day, right, like nobody knows what the heck is happening. And so everyone is just coming in there with their kind of like, BS essentially. And there's not really sufficient you need to have that like ideal middle ground where there's enough chaos to motivate action and motivate a willingness to pay for something like this, but it can't be too chaotic that nobody knows, how to even get started, right? Um, and so there was this kind of sweet spot post Russia invasion Ukraine, where when I was doing this, there was like acute demand, kind of in that sweet spot across lots of companies to sort of reassess their mental models of globalization, reassess their supply chain fragility, reassess the intersection between geopolitical risk and disruption and kind of the typical more like technical risk from cybersecurity, where are these countries exposed in terms of the network architecture, IP theft, et cetera. And so those kind of that there was like a window where that was like acute and people were taking pocket money out of, the CEO's discretionary budget to fund these sort of high impact strategic assessments. But I think over time, it kind of just get leveled down to the CISO's office. And then my overall observation of cybersecurity in general is going through a massive consolidation phase, where a lot of these boutique firms are getting gobbled up, and then even specific verticals are now being sort of stacked in with the major cloud service providers, and effectively they're just converging to become a wrapper on AI, right? And in general, like I saw this coming, like tightening budgets at the C-suite level, especially on cyber and IT spend, combined with the fact that everyone's basically converging to kind of like a wrapper around frontier AI models that are going to be dominated by a handful of the major cloud companies anyways. And then what I do is essentially just interpret events and slap it onto PowerPoint and be a smart guy to like, jibber jabber to the senior leadership of companies. And that was fun, but I don't know, it just, doing the same sort of thing and then seeing like the marginal impact or the marginal uptake of that analysis kind of falling down. It just didn't get me up in the morning anymore. So,
Yeah,
I think it's
I
still
relate to that. I relate to that deeply. And also like answering the same question over and over and over again. Like how many times can we discuss whether China is going to invade Taiwan, and how many times can I get the same answer? And how many times is it like, no, but this, you know what I mean?
yeah, and also I think my assessment of what were the truly defining disruptions coming down the pike were not the things that are salient or politically acceptable for most C-suites to like seriously consider. Right, they're sort of outside the Overton window of what they can like legitimately hire a consultant to discuss, and so they've sort of bounded themselves in this box of like the safe questions to analyze, the things that they can safely justify briefings on and consultant expenditure on, and so that creates this sort of self-licking ice cream cone where consultants know that, and so they all focus on these like highly salient risk questions, and they all just kind of like parsing out their minor little hot take divergences of opinion, or they're kind of going against consensus wisdom, and that generates sort of transient demand for your services if you're really compelling and and coherent sort of expository you know avatar of that type of position. But that seems like a never ending game. And I was just like progressively more interested and now exposed to these like coming out of the left field Overton window kind of breaking things, and I just couldn't ignore those anymore. It's like that's what's going to happen. Like that, those are the things that are going to smack you in the face in a few years. But I can't put those in a PowerPoint presentation for the C-suite of whatever company, right? They're not there yet, right? So just
Yeah,
go
I
out.
mean, this is the whole Tetlock foxes and hedgehogs thing, where like the fox can bring you the stuff that's actually happening, but people keep paying the hedgehogs and listening to the hedgehogs because, they have the point that they actually want. Like, if you're thinking outside the box, people actually don't want to hear that, or that's not the thing that they don't have the brains to process sort of things changing in that amount of time. And it's funny you say that about budgets tightening. I mean, I remember I'm much more in the investment world now, but still do some consulting and, had a past in consulting as well. And the last couple of months have reminded me a bit of COVID in the sense that after COVID, like in the initial first phases after the lockdowns, everybody wanted to talk and nobody wanted to pay. So there was like more interest than ever, but no checks forthcoming. And then there was a nice sweet spot in the middle. And I've noticed the last couple of months, everybody wants to talk, but everybody's completely paralyzed by the level of uncertainty or the volatility. Like nobody can sort of make strategic decisions. So they want to talk, but they're not sure like what exactly they want to do and where they want to put their resources. And I sympathize for them. Like big departments and big companies are, trying to navigate changes and communicate with their C-suite, and the C-suites, to your point, are listening to the hedgehogs that they trust. And then it's like this whole never-ending circle jerk. So
Yeah, and also like I was a consultant basically in various forms, and consultants have clients, right? And fundamentally, there's this asymmetry where you have to make sure the client's happy, and you want to like yada 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 with them, and at a certain point, you have to like intellectually muzzle yourself or kind of bracket how you present your views because you want to make sure you want to push them a little bit further, but you don't want to like completely confuse them or overwhelm them. And I'm done with that. Like I don't want to have to like contort my intellectual and analytical models to sort of keep the contracts flowing in.
yeah.
So
Well, well, you seem unburdened. So congratulations on making the shift. And let's get into some more interesting stuff. I mean, that's sort of inside baseball, but it's interesting to me. Um, okay, well, let's do a little how it started and how it's going. So here is a tweet from July 11th, 2019 from President Donald Trump. Quote, "I am not a fan of Bitcoin and other cryptocurrencies, which are not money and whose value is highly volatile and based on thin air. Unregulated crypto assets can facilitate unlawful behavior, including drug trade and other illegal activity." Sent at a civilized 7:15 p.m. in the evening, not normal for his usual social media policy. Then let's go to March 6, 2025, an executive action from the White House. Quote, "It is the policy of the United States to establish a strategic Bitcoin reserve. It is further the policy of the United States to establish a United States digital asset stockpile that can serve as a secure account for orderly and strategic management of the United States' other digital asset holdings." So first question, what the F? Like, what is the shift here? Like, why did President Trump go from sounding like just about any other boomer talking about cryptocurrency to embracing it wholeheartedly and using every single power at his disposal to seem to put the White House fully in not just Bitcoin, but cryptocurrency's corner in general?
yeah, I mean, I think there's a political economy story to explain that, and then there's like a structural kind of reinforcement to that. The first is just the fact that um, the broader crypto industry has felt, in the last few years, under acute attack, almost under existential threat. And so, not being a very well organized group, they kind of got their ish together in 2024 and decided to fund large political campaign activities. And those were quite successful on, not just at the top of the ticket, but downrange. They kind of finally self-organized and decided to pick a side. And that was not inevitable. I know there were folks, in the course of the spring and the summer that were approaching the Kamala campaign. And they basically said, like, we can bundle you like $100 million. But all you have to do is just commit not to like keep up the attacks on the industry. And they said, no, we'll take your money, but we won't commit to that. And so it was like, okay, well, I guess those $100 million are not going to go to you. They might go somewhere else. And they were just maybe confident, or they, for whatever reason, they didn't want to go that direction. So there's just like a political economy, right? Like every election is spent every election is a function of spending. And this is the first election cycle where you know, there was like now this new source of capital that was highly politically motivated. And the two candidates took very opposing views on what they would pursue in terms of policies, and that's just how politics works in America, right? So there was that kind of just like, why did Trump change his mind? He wants to win, and he's like, all right, there's folks out there that are going to give me $200 million to help fund my campaign, like done, right? I don't think it's as complicated as that. Back in the so that's like the political economy explanation. That's probably the first order. But I think there's a second order trend underway by elements, you could say, of like the security apparatus that was taking a look at the shifting geoeconomic system. And this has been my sort of main analytical focus for the last few years, making this kind of case to like, we need to kind of like, keep Bitcoin as a live option on the table for America over the long term for a number of strategic reasons that we have an asymmetric advantage for. And those voices were kind of, tucked behind the curtain, folks in various, bunkers writing internal memos. But there was a sense that things were going to come to a head pretty soon, especially U.S. China. And, part of the Trump campaign and their sort of increasing, as they kind of got staffed up with kind of their policy team and to sort of formulate what was going to be their strategic vision in 2025 into the rest of their term, there was, already an accreting consensus that they were going to shake things up. I mean, this was going back to Besant's speech at the Manhattan Institute, earlier in 2024, and then kind of the seeds being planted about they were going to do some pretty dramatic things in 2025. Exactly the scope and scale and how effectively those be implemented, TBD. But like it was very clear they were telegraphing like the status quo is not going to endure, and so they were going to like flip the table over essentially on the global economic monetary system. And so in that regime, you're like, okay, the sureties and assumptions around the structure of the global monetary arrangement, treasury security as the global reserve asset, the kind of foundational collateral in the offshore dollar system, combined with the fact that we're running structural peacetime deficits, the fact that China is now, climbing value chains, is now aggressively competing, higher up the strategic ladder on lots of these different domains. It's like, there's a sense that like lots of things are going to have to change. And now the options on the table that would have never been previously considered are now on the table. And so that's like where Bitcoin kind of found its way in, right? Is just the parameter space, the aperture of policies that could now be considered once you basically make the strategic decision that we're going to change things, we're going to break things. And there's going to be this massive complex phase transition to some sort of new arrangement. That provides a door for other things that would normally not be allowed into the discussion to come into the discussion. And so I think the combination of the political economy shifts, as well as just the strategic aperture being opened up, allowed kind of Bitcoin to flow in. And then, of course, it's the general cycle of Bitcoin kind of doing its thing and just, overall, movements of ETFs and kind of the legitimization of it as a global asset class, Larry Fink, and basically a bunch of these elites kind of getting orange pilled. And then that sort of filtering down. So I think it's like multi-causal, right? It's no like single point of explanation, but it's been a clear kind of strategic shift in how the U.S. government views Bitcoin.
And is it just Bitcoin? And I'm trying to get to Trump's like real intentions here, because Trump has also talked about Ether and Solana and Cardano. He has a meme coin of his own, the Trump token, which, just reeks of corruption and things like that. So like, do you think it's just, oh, I see an opportunity for money and I grab here? Do you think that there's been some like actual internal change that no, it's crypto in general? That executive statement I read, Trump has talked about some of these other cryptocurrencies that are out there. Like the executive order says, no, Bitcoin is the original cryptocurrency. It is the one that like we need to focus on. So how do we think about Bitcoin versus some of the others that he has raised and then backed off on? And it's not really clear like where all these fit in.
Yeah, no, it's been my view and DPI's view that like there's one really serious thing here, and that's Bitcoin. And that's the true strategic asset. But of course, there's a lot of money floating around crypto. And those folks can, donate money to get a lunch and get a tweet, right? And so that's kind of the system we exist in, is this superposition of like serious strategic kind of undercurrents, as well as like, the froth of grift and, just sort of the traditional transactional politics inside inside DC. So that it's like both are happening at the same time. And that makes it hard to kind of discern like signal to noise here, right? It's very easy to kind of look at these things and be like, oh, this is just this kind of grifting operation, self-enrichment, sort of court politics, kind of elites sort of, filling each other's pockets. And of course, that is happening. That happens in like every elite system. It's just now it's sort of the norms are down, and so like it's more visible, right? Like it was always a function of our American political system. It's just there are ways of kind of obscuring it from public view, or we had norms about not doing it so brazenly. Uh, but I mean, I think so that those are things that are clearly occurring. But I think underlying this, and I think the executive order demonstrated this. Like you kind of see it in how it's written. Is like we kind of have to kind of pay a sop to the crypto people. We're going to give them this digital asset stockpile, but we make no commitment not to sell it, right? Whereas the Bitcoin strategic reserve, we explicitly commit not to sell it, and we have a decisive instruction to the Commerce and Treasury departments to find budget neutral ways of acquiring more at no incremental cost to the taxpayer. So those reflect kind of a very different valence and strategic attitude to Bitcoin and then everything else. And so everything else had to be in there, but it was kind of given the bare minimum, kind of like lip service. And then all the strategic attention you can kind of see is shifting back towards Bitcoin. Now, I'm in DC, Bitcoin Policy Institute. We're kind of a relatively new think tank, kind of now like jockeying with these existing institutions and advocacy groups and lobbyists, et cetera, that for many, many years have been sort of funded by the crypto industry, right? Bitcoin is a leaderless, decentralized, peer-to-peer, open source software project, right? There's no inherent leader or kind of corporate board or, it can't hire lobbyists, right? There's like crypto VC firms and token, issuers and exchanges, and miners. Those are incorporated entities. And the most incorporated entities, by like political capital and also by incentive structure are on the sort of the crypto side. So they've been heavily pushing certain legislative priorities on market structure legislation and stablecoin legislation. And then, Bitcoin is kind of this kind of, oh yeah, Bitcoin's important, but it's not directly relevant to the business model of most of the digital assets industry. And so BPI kind of exists to kind of represent kind of like the lumpen proletariat of digital assets. It's like just Bitcoin as this project, as this like open source kind of emerging technology. And it has industries attached to it. It has Bitcoin mining, it has custodians, it has major investors, companies now using Bitcoin as a treasury reserve asset. So there's a lot of like actual entities that have, vertically integrated control structures, that can advocate for themselves inside DC. But we're not an industry association. So we're there to kind of like rebalance the scales, right? If roughly speaking, Bitcoin is 60 to 70% of the total market cap. If you actually throw out a lot of other junk, it's probably more like 80 to 90%. But if you actually look at like the total amount of spend by like advocacy groups and lobbying groups on digital assets in DC, like 89% of it's spent on like non-Bitcoin stuff, stablecoin stuff, market structure stuff, token, security, sort of designation stuff. And so I think you see that reflected in the political economy. So that's kind of BPI's sort of raison d'etre, sort of, try to at least rebalance things so that the advocacy in the industry is at least market weighted. So yeah, that's where we are now. But it remains to be seen, right? Like how we're gonna see these different trend lines start to diverge potentially. Is Bitcoin is a global asset now, right? And so I view this as a lens. I view this through the lens of what's really strategic going on, trying to like filter out the noise here. And I see Bitcoin and stablecoins, right? And in a global system where now gold is increasingly being, remonetized and brought in the global kind of competitive dynamic between major capital pools that are being weaponized by these, confronting hegemons, aspiring in Asia, and then the legacy in sort of the West oceanic system. And we're all kind of looking at these emerging tools and assets, stablecoins in particular, Bitcoin and gold. And that's the most important strategic dynamic I see playing out right now. So yeah.
Mm-hmm. Are there, to your knowledge, like, is there an Ether Policy Institute or a Cardano Policy Institute? Like, is anybody making the argument that you guys are making about Bitcoin about some of these others, or is it almost like self-segregating in the sense that like Bitcoin is the only one that is serious enough to create this kind of, I don't know, intellectual strategic ecosystem behind it?
Yeah, I mean, there are. I mean, it was kind of funny. Like literally, like a month ago, there was a new thing created called the Solana Policy Institute, and like branding and everything was kind of like very close to ours, and it was like donated. It was funded by one guy, and it was just kind of this thing. I never actually met anyone from them. Uh, but they exist now. Like Ripple, right? The sort of um, you know, I won't get into the details of that, but like they committed like $40 million to spend on like marketing campaigns essentially. And but there's some legacy institutions that we work collaboratively. We're friendly as the Blockchain Association, the Chamber of Digital Commerce. They've been around for a long time, so they we're the sort of vanguard for this sort of stuff for many years. But they're more like industry associations, right? So they're explicitly there to kind of represent the digital assets industry, right? But we are the only significant think tank, right? That's dedicated to these open monetary networks. There's one that's called Coin Center, which is really good. They're small, but they're mostly focused on like civil rights, sort of advocacy, sort of litigation, protecting open source software developers. But yeah, I mean, I would say we do the think tank thing. We put on events, put on white papers, but our main focus is trying to understand and try to shape the system of government, right, and the international structures associated with these changes. And we're finding that there are a lot of folks inside what you call the deep state, right, that have been paying attention to Bitcoin for a long time and that are now very serious about Bitcoin. I would just note that there was an interesting statement made just yesterday by the deputy director of the CIA, where basically he said, Bitcoin is here to stay, like more and more institutions are adopting it. That's a great trend. It's another area of technological competition where we need to make sure the United States is well positioned against China and other adversaries. And he said, I think we need to make sure we are a leader in these fields internationally and not a laggard. Which is kind of an interesting statement for the deputy director of the CIA doesn't come out and talk very much. And to have him just come in hard to the paint and say, Bitcoin is critical to technology competition with China. I was like, oh, that's interesting. So I think sometimes it's hard to filter out signal and noise here, but I'll tell you, I've had lots of conversations with folks inside DARPA, inside the intelligence community, inside the Defense Department. And Bitcoin is squarely on their agenda. I'll just point out the crossover with China. Admiral Paparo, who's the 4-star Indo-Pacific commander. He's responsible for, planning to fight and win our war with China. But of course, he has a lot of, sub-threshold responsibilities as well for economic warfare, operational preparation of the battlefield, shaping activities in that theater that involve a lot of, economic statecraft, financial warfare, et cetera, et cetera. And he's a raging Bitcoiner. He's not a casual guy. He's very pro Bitcoin and is advocating inside the administration. So these are shifts that are not as visible to the outside, where it's we're Liberty Financial and the Trump token and all the sort of crypto stuff, right? And I mean, it might even be a clever ploy to have that as kind of be the screen. And one of my colleagues was just in Hong Kong recently, and was invited to have meetings with a number of senior officials there. And they were extremely well read up on the ins and outs of the policy dynamics that I pay attention to, the ideas of gold certificate revaluation and the reconciliation process, different means of financing and funding the strategic Bitcoin reserve. These are super inside baseball things in DC that I talk to a lot of people, even in the crypto policy industry. And the folks in China had a much better read on what was happening than most of the folks that we talked to in DC. So that was a clue, right? These guys are paying attention to what really matters. And they're sussing out, what is the government really doing here? Are they preparing some sort of big pivot, right? And there's a lot of chaos, a lot of noise. But if you want to try to see where things are going in this kind of phase transition, then you can't ignore the policy moves happening on Bitcoin.
That reminds me of a funny story. I might have said this on the podcast before, so apologies to listeners if you heard this story before. But I was in Moscow. I was the token U.S. guy speaking at a conference of a bunch of Russian analysts. This is before the Russia-Ukraine war. I remember I got cornered by this one, he was the Russian U.S. analyst, and there was some election happening in Alabama for some congressional seat that I'd never heard of. And he was like, "Tell me, what do you think about the potential implication of the U.S. government of this Alabama congressional seat?" And I was like, I have no clue what you're talking about. Like, I don't care about Alabama, like the nitty gritty granular focus. It just kind of reminds me of that. Well, okay, that all makes sense to me. So maybe let's back into sort of a bigger question, which is, I think even some of President Trump's most ardent supporters are coming around to the notion of, even if he had the right strategic goal in mind, the way that he is implementing and executing policy has become self-defeating. Just the level of volatility, it's tariffs one day, no tariffs the next day, like all of these different things. It's defeating the purpose, and you actually see like countries losing faith in the United States, even the countries that the United States says that it wants to do business with. So, okay, the Trump administration has followed through on many of its promises on the campaign trail to the crypto industry. Is that good for Bitcoin going forward? Is it bad in the sense that maybe the implementation or execution, like with tariffs, has been all over the place? Is it actually better for Bitcoin that the dollar's value continues to go down and that yields continue to go up and that the deficit figures continue to go up, because that just underscores the argument for Bitcoin in the first place? Sort of map on sort of crypto policy versus what I would call the haphazard implementation of a lot of the other sectors of Trump's policy towards the economy.
Yeah, I kind of I have different perspectives, but I think my view as executive director of BPI is trying to find policy paths that are win-win, right? That are good for Bitcoin, because I think Bitcoin is a good thing, and good for American strategic interests, good for the American society, right, over the long term. And so there's a multi-level thing. It isn't just advocating for like number go up, right? It is advocating for a vision of technology and financial networks in the 21st century that are fundamentally aligned to our values, right? If we're in this battle between open and closed systems, between concentrated elite kind of gated capital markets and open participatory markets where individual autonomy is reinforced. I think ultimately, like my like ethical and political attitude is much more like classical liberal, and if we're in a world system that's being driven by geopolitical competition and technological acceleration, it's going to be naturally centralizing of authority, right? Both in terms of just the access to, say, frontier AI models, and then when states start to fight, right, they tend to want to arrogate more authority to themselves. They want to gate their economies. They want to sort of put up more, basically more clubs and fences. Um, that's implicitly going to mean us, come at the cost of individual spheres of autonomy. It's like my like overall political view is to try to steer our policies in a way that like keep to our core values, and that we don't try to become more like China in order to defeat China, right? And that's an inherent tension, right? That exists at the government level. So that's like point one, right? And I think Bitcoin is fundamentally more on the side of classical liberalism versus sort of closed authoritarian surveillance systems. And I think we want to fight against that, and we want to use technology and tools to like reinforce the sphere of freedom for individuals in the next few years and decades. Now on the economic side, right? Like when I think you try to assess my sort of model what was happening the last few weeks and months. The Trump administration, there were like two major factions, right? And this is a bit banal at this point, but there was the sort of technocratic faction, Bessent, Moran, and they had a vision, and they were telegraphing this of kind of one forward guidance when it comes to tariffs that would be geopolitically gated, right? So there'd be red, yellow, green, and they would start off at a certain level, and they would incrementally rise at different levels, right? For whether you're a rival, whether you're a balancing power, whether you're whether you're an ally, and the objective there was to like more explicitly demarcate the boundaries around the American monetary and security tech trade zone. That they see that the global commons has essentially been exploited by free riders, the mercantilist policies in Asia, as well as defense free riding in Europe, and there's all these conflicts that are draining our national morale and our national capital. We have lots of debt. We need to kind of like re-underwrite the security zone, and we have a certain set of advantages to do so, right? We essentially can do a bunch of levered bargains, if not like shakedowns, to sort of force folks to pick a side, right, and to sort of now re-underwrite the fiscal health of the hegemon in this sort of imperial dollar system now. And so that was their plan, was to kind of come out with this kind of different tiers and to kind of then ratchet it up and then pull our allies into this circle and lock them in, and then do a variety of different swaps and exchanges to extend out our debt, force them to buy century bonds, and we would leverage the fact that, hey, well, do you want not get hit with export controls on GPUs? Do you want us to impose more restrictions on access to OpenAI's frontier models? Do you want not to be hit with a large tariff increase to kind of force people inside the club and they have to pay an entry fee? So that was like the technocratic kind of like, oh, this is the master plan idea, where a bunch of sort of gigabrain hedge fund PhD folks like Moran and Bessent kind of come up with this idea. And then there's like the Lutnick Navarro idea, and maybe even some folks on the the heritage side, which is just like, no, we need to punch everyone in the face, throw chaos, right? And then also some like an idea that we will actually make revenue, right, from tariffs. So we'll actually like be able to like fund our budget, and we'll go back to like the McKinley era. Uh, but the problem with and I think you've had cousin Marco on this, and he's made this point, like the McKinley era, where where primary government expenditure was like 2 to 3% of GDP. Now it's like 30 to 35% of GDP. So sorry, that dog won't hunt now, right? And they just weren't looking at the macro models of the fiscal balance sheet and the fragility of the treasury market, and they just tried this move. And I think I also had Lutnick versus Bessent in the Oval Office kind of pitching, and Bessent's a bit of an egghead, a bit of a kind of a dilettante. He kind of not the most articulate guy, not the most, doesn't like exude confidence when he talks. Whereas Lutnick is this
He is not charismatic. He's not charismatic at all.
Whereas Lutnick is just like, telling Trump, oh, like, of course, like, they're going to take it. We're America. We're like, we're a superpower.
Well,
So I think
I'm glad you brought that up, because just to pause for a second, like maybe Lutnick has charisma, but the things he says are so stupid. Like, he seems like such a moron to me. And I'm not saying that pejoratively. I just literally, I listened to him talk, and I'm like, did you take like an economics class in college? Did you finish high school? Do you know basic arithmetic? Like this, like it blows my mind. Like, I don't know what's there. Is it just and he must be successful because he's gotten to where he is. He's more successful than I am in my career. So like I'm in this weird like twilight zone where I'm like, how is this, like, this guy is in this position doing, I don't know. Anyway, take it that any direction you want.
Yeah, I mean, I don't know his again, how much of this is intentional chaos, how much of this is just the bumbling clown show, right? And I think it's a mix of both, right? But now they did it, right? So they did Liberation Day, right? And I think Bessent was, able to come back and sort of take the wheel on that Sunday, flew down to Mar-a-Lago and convinced Trump to pivot away from this idea that we were going to like literally go full McKinley and more back to try to steer things back to the original play. But they had, it wasn't as, it was like, oh, they're in the middle of the storm now. You gotta like now scramble to get Japan in, scramble to get South Korea in, send JD over to India, try to like, do things in a much more haphazard way with a bit more urgency than I think they were originally planning. And I think this is also where the tension with the Fed came in, because the bond market started revolting, and they're like, oh crap, we're going to get Liz Trust, and we need to stop that. And so there was this like acute sense of we need to like dial things back a bit. And that's it. I think that's generally speaking the story of the last few weeks. And so I think they've been mostly focusing just firefighting because of a strategic policy era. And now, the ambition by the Bessent folks is that maybe they've gotten more univalent control of the policy apparatus here to a certain extent. And they can try to, the chaos and volatility has been somewhat dampened. They can try to steer things back. But there was never a plan to like have full certainty, right? It was, forward guidance, but it would be kind of geopolitically tiered. And now I think you're seeing the contours of the original plan kind of come back into form, where it's very clear that they want to get, their allies in to a zone that's like tightly locked, so that they have free trade agreements with us, but they have high tariff barriers with China. And this goes back to like versions of the British imperial preference system, the European continental system, even has flavors of the Cold War coordinating committee system, where if you have like a block effectively that can reinforce a certain hegemon's power and have like preferential trade as well as now technology exchange, maybe you can hold the line against an ascendant China that has a lot of power, has a lot of capability to sort of challenge your position in various ways. So there's this, I think, this acute anxiety driving this inside the security apparatus that if we do nothing, China will just like run over us basically. But I also think the trade wars are slow to play out, to actually change business investment and, reshore and do the currency adjustments over time. It's taken a long time. But what the declaration of a trade war does is it immediately triggers, a financial and supply chain war, right? Because we effectively embargo China and no more purchases of goods, right? Means much less dollars flowing into the Chinese system that destabilizing a lot of the financing, balance sheets that they have in a highly leveraged domestic economy. Um, and then they can retaliate, right, by pulling capital out of our asset markets and, wield different instruments to try to put stress on the sort of shadow bank and dealers that intermediate the treasury market. So there's been, I think, a trade war that turned into a sort of financial and capital war and supply chain war. And because the system is so highly leveraged, just in time, it's like we have just in time repo and just in time delivery, right? That I think we both realize as soon as we flipped into this regime, the wheels will start to come off the global economics, car pretty quickly. And that everyone is basically mutually assured economic destruction at that point. So I think that's now, there was a lag in that because obviously you had a lot of inertia in the trading system, invoices still being paid and, ships already in motion. But I think you're pointing at data and I think you talked about it's there's that's once that stops, then it's the Wile E. Coyote moment, right? And maybe that's why both sides are now trying to change their tune about being a bit more conciliant in their conversations. That's a bit more tactical. So.
Yeah, and I mean, we've already seen initial sign, whether it's Walmart and Home Depot going to the White House, and then you see some purchases starting to begin and trying to exempting some things from tariffs. There's a little bit of motion. I still think a recession, it's already in. You probably saw the GDP print from yesterday that first quarter was down. But how does that? Where does Bitcoin intersect with that? Would you say that Bitcoin was sort of neutral relative to the events of the last couple of weeks and months? Did it negatively affect U.S. strategy towards Bitcoin? Was it sort of unintentionally positive because it just underscored the argument for Bitcoin in the first place? How is your world reading what's happened in the last couple of weeks and months and where we go from here?
Yeah, obviously there was there was a lot of meetings lined up before Liberation Day that all got canceled, right? Because it was just chaos. It was chaos, and all the principals and all the decision makers and everyone was just like, "What the heck is happening?" And so Bitcoin was just pushed on the back burner, right? Now it's coming back in to the policy conversation. There's just inside baseball is there was an executive order signed. It instructed them to come with these budget neutral ways of acquiring Bitcoin. And then they did this 180-day report due in the summer by the president's working group on digital assets. So that machine is turning, and it's very high level, right? It's got the two principles on it, and now you have the CI deputy director making public comments on it. So there's been a lot more public engagement on Bitcoin, and just in the last week, it's sort of turned back up as a salient priority issue. I'd say the macro dimension is just kind of obvious. When hegemons start fighting, right? In that acute, when the sumo wrestlers come and smack into each other, the uncertainty and the chaos, the shock leads to people's margin calls, and just you want to just dash for cash. People become very bearish on risk on assets. You saw Bitcoin kind of crash essentially 20-25% from its kind of euphoric peaks post election. But I think what people are now pricing in, it's been an interesting turn is there's been a bit of a premium now attached to Bitcoin beyond its sort of NASDAQ correlation. It's now trading a bit more like gold in some ways. And so maybe 20% like gold, 80% like NASDAQ. I think that ratio is shifting from being 5% like gold, 95% like NASDAQ to being more and more like gold. I think that's because institutional portfolios, sovereign wealth funds, major pools of capital are now reappraising this. And then the overall regulatory environment is dramatically changing. Right. So banks are now able to custody Bitcoin. You're going to be able to start buy and trade spot Bitcoin in Charles Schwab accounts. And that's going to unlock huge amounts of capital, just people just mechanically, investing in their brokerage. So there's regulatory under the hood institutional changes that just fundamentally de-risked Bitcoin from being a speculative kind of fringe dark web money asset to now being an institutional asset that, is high vol, high risk, but essentially in a balanced portfolio can optimize returns. And that's been BlackRock's pitch. They're going around the world telling sovereign wealth funds you need to have 2 to 5% in Bitcoin. And they're doing that. It's happening. And so we are in this sort of gradual shift where the financial markets are now integrating Bitcoin as just an asset class, while at the same time looking ahead to this chaotic dynamic unfolding between great powers, where the assurities of the stability of the treasury market, the global trading system, the financial networks are being weaponized and fragmented. And so inside money, essentially, the inside money of globalization, the inside collateral of globalization, which was the U.S. Treasury market, is now being politicized and securitized and fragmented. And so in that process, right, people are turning to outside monies as a hedge and also as a way to sort of potentially posture for whatever system comes next, right? But we're in this phase transition where there's high uncertainty and people are just looking for hedges, but are pricing in, contours of what a future post-transition system is. When we squash the beef in the Eurasian periphery, when, we make some sort of, grand bargain with China and, what sort of resettle the balance of how the U.S. Demarcates its security monetary zone and forces financial oppression on its allies. Ultimately, the upshot is probably higher inflation, probably like more devaluation of currencies, like a coordinated devaluation, whether it's explicit or implicit, against harder assets. And so just in general, right, the mechanical upshot of this is Bitcoin will go higher. My argument inside DC has been if you're doing this intentionally, right, sort of upsetting the global economic monetary order, like what's your plan to maximize upside and minimize downside? Because like we have a glass jaw here. It's called the treasury market. We saw that acutely on that weekend. So you would want to find ways of kind of shoring up the treasury market, and there's like technocratic ways of doing it and forcing our allies to buy long bonds and swap their gold or short-term reserves for those things. Force Japan to take 150 billion out of the FEMA repo facility to buy 30-year bonds. It does take a lot of political capital and geopolitical capital. Like you have to actually twist elbows to force them to fund our deficit and term out our debt. That's not costless, right? And people are going to respond to that by being like, I don't want to be in a position of coercion. I want to have more, marginal exposure to these harder assets because I know the government's preparing to kind of like inflate their debt away, which is what indebted hegemons always do, especially when they get into great power conflict, right? It's like, sorry, like financial markets take a back seat to strategic prerogatives, and domestic pools of capital are now like you pull capital into your country and then you just force it to take it in the teeth. That's just what we've done for hundreds of years. This is what we're going to do again. And so people are looking for outside monies, like scarce art or gold or Bitcoin increasingly. And if you're intentionally, pushing the world system into that era, well, if gold remonetizes, that's, I think, marginally going to benefit our rivals, right? The authoritarians in Eurasia that have aggressively accumulated gold. And then have kicked Bitcoin out to a certain extent. There's still Bitcoin miners under the table there. There's some arms, sort of shadow activities there. But officially, you're not really allowed to transact there unless you're doing it kind of in the Hong Kong sort of, sort of interstitials. Whereas we have probably, if you do the numbers, 8 to 10% of the above ground gold stock held by the government, gold ETFs, and American citizens, just jewelry, et cetera, gold coins. If you do the same analysis for Bitcoin, we have maybe 30, upwards of 40% of the available Bitcoin supply held by American custodians, Americans, American companies, and the American government in the Strategic Bitcoin Reserve. And so just if you assume in a world where hard assets are going to be increasingly, more valuable relative to fiat currencies, which is probably the safer bet on a structural trend, Bitcoin appreciating at the same rate as gold has a 4-to-1 asymmetric upside for the U.S. But Bitcoin, because it's a much smaller asset, it's about 15th or the size of gold, it'll move much faster. So I think it just makes more sense, right, for the U.S. to kind of hedge itself pretty low cost way with a significant Bitcoin exposure, as it's going to sort of allow this devaluation to happen, which it is, right? It's going to bring the Dixie down dramatically. They're going to do crash domestic techno-industrial reinvestment to meet the energy objectives that they have to beat China in the AGI race. So all these things are interdependent, and they have a vision of remaking the global order. It's going to be expensive, and someone's going to have to pay for it. It's likely going to be the bond market, and the first person to eat it is going to be the foreign sort of allies like Taiwan, South Korea, Japan, the Norwegian sovereign wealth fund, the Australian pension fund. Like we're gonna like force them to like eat the losses. Now they could be like, screw you, like I'm turning to China side, and that's a high risk move, right? If you're gonna like the mafia enforcer who goes around the neighborhood and says, sorry, the rake has just gone up. right? And everyone's like, well, actually, there's a new mob boss down the street who's maybe more credible at providing protection to me, isn't as aggressive, has like good EVs that I can buy, cheap goods that support my domestic economy. Like, what exactly are you offering here, except for like a thuggish, implicit threat and security protection from big bad China? That's kind of what it is, right? It's like competing mafias going around and being like, okay, now everyone has to pick a side. And ultimately, it's about perceptions of who's still got the juice, and then who's coercive or inducement, um, tools of statecraft are going to be more compelling. But I think in that era, Bitcoin is now this tool on the table. One, it just will continue to run, and I think the strategic implications for U.S. is, Bitcoin when it's usually does nothing for a certain period of time, and then it just like goes crazy. Right? I think most of the positive upside for Bitcoin in like a trailing 12-month basis happens in like 9 trading days. Right? So like, you can be lulled into complacency and then all of a sudden, boom, right? It's now double, right? And that was fine when Bitcoin was like $100 billion, $200 billion asset. Now it's a $2 trillion asset. So that going, like meaningfully towards parity with gold, which is not implausible scenario. I'm not saying it's like my base case, but it's not implausible by the end of the decade, Bitcoin could reach, some measure of, start to eat into gold, maybe even reach parity with gold. That would be a strategic shift in how we think about the function of reserve assets in the global system. And I think most people don't even think about that as a scenario, right? But I'll tell you, folks inside the U.S. government are very much thinking about that as a scenario. And I don't know, like update your mental models is what I would say.
Are they also thinking about it in terms of yeah, you mentioned gold and about 8 to 10% of above ground gold. I had Will Freeman on the podcast maybe 6 months ago now, and he dropped the statistic that I wasn't aware of. It's something like 15% of the gold that's mined every year is mined illegally, smuggled and pirated and sort of other things like that. And that, gold is not traceable in that sense, where you can make it hard to trace, so that different criminal groups or non-governmental groups that want to hide from, or even governments that want to hide from sanctions, like this is a way for them to sort of transact. Um, isn't that sort of also true of what we're talking about here? Like we have the rise of, I just recorded a podcast yesterday. It's not out quite yet, but I was talking with Elo Menard on the podcast about the attack on French prisons a couple weeks ago by these, basically gangs that have had a surge of money and power because of the increased cocaine trade from South America, strong enough that they're literally attacking French prisons at daylight to break out some of their bros who are in the prison. So is there any concern in your mind that actually if U.S. policy does push some of these allies away? And by the way, early returns are not good. Like Japan, if you look at Japanese behavior and statements in the context of what you're talking about with the mafia boss coming by, you would expect them to be like they're not bending the knee at all. They're saying, oh, we're not going to do anything to jeopardize our relationship with China. Thank you very much. We will take an alternate path. So if that's the approach, not very good. But so is there a world in which if this is actually challenging to U.S. hegemonic order? Because right now the dollar, you can use the dollar in lots of different ways to achieve different, national security goals. But to your point, like the U.S. government can't use Bitcoin. That's in some ways that's the point. So help me with the tension that I'm struggling with there.
Yeah, I mean, this is Bitcoin as an asset is what we've been mostly talking about, as a digital gold, just as a fixed supply asset. But of course, Bitcoin, the network, is this global permissionless peer-to-peer payment system, right? There's no choke point, surveillance. There's no choke point ability on Bitcoin. There's large surveillance ability on Bitcoin, right? You can track all these, that's the whole function of it, right? You can see exactly which Bitcoin is moving where. And there's been a large investment by the U.S. government and private sector in chain analysis to be able to track flows on the blockchain. They're really good at it. So if you're a criminal trying to fund operations with Bitcoin, it's not a great idea. There are other protocols and other ways of kind of getting around that. Stablecoins have become very useful, kind of in gray markets around the world. And I'd say the U.S. government has kind of approached this in the same way they kind of approached the proliferation of the original Eurodollar market, right? Which is a way for the Soviets to kind of get, to kind of recycle their dollar surpluses, because they were still in the global trading system, but they were officially, not allowed to engage. And so, there was this sort of market response to create dollar IOUs and offshore balance sheets to sort of intermediate, this kind of gray trade, right? And the U.S. government had kind of a mixed view of that, right? One was like, oh, well, it's the bad guys, right, taking advantage of the dollar system. But, we also have ways of kind of taking advantage of that, right? Right? Like that's actually, it spreads the dollar. Now all these Eurodollar banks have to kind of, buy our debt, right? And also they can become means of our own sort of covert finance activities. And I think the same is true with like Tether, right? It's like, you know, a thing that's used by criminals isn't necessarily always a bad thing for the U.S. government, right? It's like, one, we can now see where the criminals are doing their business and we can get close to them. And the U.S. government likes doing things offshore in ways that are deniable, right? So I'd say it's always a mixed opinion, right? The U.S. government doesn't want the global system to be entirely transparent, right? It wants it to be maximally transparent to itself while minimally transparent to its rivals. And those are not like perfect objectives. You have to make compromises. And so the question is alternatives on the table. Would you rather have those countries be increasingly ensnared by a Chinese techno-authoritarian and digital currency stack that has WeChat, Alipay, the DCEP, Project Enbridge, sort of Hikvision, ZTE, Huawei phones and their AI models, where now most of the global south and increasingly large parts of Eurasia are now in this sort of techno-authoritarian stack that's fundamentally, controlled, has root access by China, and has a payment system that, is fundamentally, has a network topology that's entirely independent of the network topology that connects to the U.S. sort of financial networks. So stable coins are kind of like a natural kind of, okay, you don't get perfect control. You have to give up some things. You have to accept the fact that rogue bad actors on the margin are going to exploit it. But that's just the nature of open systems, right? If you want to have full control, then you got to accept you want to just become China, right? Just totalitarian lockdown and everything gets surveilled and controlled, right? In a free society, you have to accept criminal activity, right? That's just like the compromise we make in a democracy, because you don't want to have big daddy government looking over your shoulder everything you do all day. So just those are trade-offs in reality. But the strategic advantage is those countries get essentially semi-dollarized, and if they're properly regulated. You expand stablecoin balance sheets. Well, that's a marginal extra buyer of U.S. debt, and there's a synergistic flywheel between adoption of Bitcoin as a hard asset in this increasingly fragmenting world system where the treasury market gets essentially financially repressed, and the dollar price of Bitcoin being intermediated by stablecoins, more demand for stablecoins equals more demand for U.S. Treasury debt. If they're properly regulated and reserved, then you can sort of expand the dollar network while competing against China. So that's kind of been the pitch here. There's no, and it's always going to be a cat and mouse game when it comes to counter threat finance, sanctions evasion, etc. But I'll say, like, doing things on an open blockchain is not as ideal from a criminal's perspective. It's fast and it's efficient, but they're exposing themselves. Most serious money laundering still happens, not on crypto. It happens with offshore LLCs and in the Caymans, or not really the Caymans anymore, but used to be in other locales. And gold bars are still, very serious things that are, being weaponized. But I would say, so one other point most folks, when they model geoeconomics and the monetary system and the competition between, say, U.S. China, they're not factoring in what is like a dark matter that exists in the system, which is like the power of, I would say, like transnational structures of power and money that have become extremely influential, but they're hard to pick out, right? And I'm not talking about like the Illuminati cabal, right? Some Davos, right? But there are large amounts of capital and networks of individuals associated with multiple different countries that wield enormous amounts of influence. And I'll just say the intelligence systems of multiple countries had a very strong incentive to sort of support the emergence of such structures over many decades, and they kind of hyper accelerated in the last 30 years. And so financial markets are not just like, okay, buyers and sellers, trying to price the future. They are grounds by which these different competing intelligence systems try to get advantage over each other. And I say there's a long running principal agent dynamic at play in every system between the political authority, the national government, the leaders, right, and then these intelligence systems, right, which have existed for a lot longer and perceive themselves as enduring much longer than the terms of office of the national leadership and whatever policies they want to pursue. So I think no one can, if you don't actually model in what you think, I don't mean like the CIA qua CIA. I mean, the dark matter that sort of is around that set of systems that has existed for a long time and is gained a lot of capital. they have certain interests themselves, but they don't go on Bloomberg. They don't, articulate this in op-ed pages. They don't, debate openly their views, right? They just fight back in the terms of the fight that they're engaged in, which is financial markets, capital markets, and political markets. And so I perceive a lot of these things that Trump is doing is fighting that type of battle at the same time, right? He's like, the U.S. China competition is the main dynamic, but he perceives there being this sort of structure, right? They call it the deep state, and they're obviously, wrapped around various axles of, conspiracies. But they're not entirely wrong when it comes to like the existence of such a power structure. Uh, it's there. I mean, you have to be very naive to think that that doesn't exist. Now, how univalent is it? How coherent is it? I think there's debates on that. But if you're not modeling these dynamics with that factor in, you're missing a huge component of what's going on right now.
Yeah, and this stuff makes somebody like me uncomfortable in some sense because there's an old Chris Rock bit where we can update it for now. Like first they came for China, that was okay. Then they came for immigrants, and it's like I sat up in my chair because Jews and N-words are next. Like that train is never late; it always comes. So if we start talking about dark matter and international cabals, there's capital around it. Like eventually, the Jews will be blamed for this thing in some sort of way. Which it's
Well,
not a
the
coincidence that
irony,
there is rising anti-Semitism around the world
I
as some of
mean,
these forces
the irony
congeal.
though is I would associate, whatever this structure is, I would associate more with kind of a fascist Nazi um, orientation than anything else. I think if you tell a sort of history of the 20th century, post World War II, we had basically an alliance with the Nazis, or I'd say the OSS, sort of CIA, kind of elite U.S. factions, which helped finance the Nazis in the 30s, and then set up all these rat lines, even starting in 1943, 1944, mainly through Spain and the Vatican, to relocate thousands of SS officers and other Nazi elite to South America, and then the scientists and the technical folks we portioned off in Operation Paperclip and brought them to the U.S. to finance to drive our military industrial complex and created our space program and created other secret programs. And so, that's the genesis of this is like we made a deal with the Nazis to sort of save the key elite and their technical talent. We brought them into our system and they became the foundational kind of core of this security apparatus and this technical military complex. Um, and that never went away. Right. And I think it was managed to a certain extent. It was compartmented under government oversight for 20, 30 years. And I think in the 70s, it's kind of peeled off, kind of did its own thing. Um, so like, obviously Trump is an authoritarian by inclination. And I think he's rivaling, he's ratcheting up kind of populist sentiments and sort of traditional nativism. And that has failure modes that are quite destructive. But I'd say fascism, pure fascism isn't necessarily ethno-fascism, right? Pure fascism is just an alignment of capital with the state. And especially, concentrated capital doesn't view, governments as, you know, as their ultimate authority, or national boundaries or ethnic allegiances even as their primary attachment. So I think, there's lots of things happening at once, right? Lots of fights always happening, lots of different elite factions kind of jockeying for power. And they will whip up popular sentiment and kind of create propaganda on both sides to kind of, win those fights. But ultimately, it's like an elite civil war, I think, taking place. But it's not just an elite civil war taking place inside the U.S. political economy. It's an elite civil war taking place inside of the global political economy. And even in China, right? There are elites in sort of the Shanghai clique, folks in Hong Kong, that very much want to squash the beef, get back to business. And they don't like Xi. They don't want Xi to be in power, right? And you've noticed there's been a lot of instability in the Chinese system. A lot of very senior folks very close to Xi have just been purged. So there's a lot of, like underneath the surface, there's a lot of like things going on that are indications that the system is going through convulsions. But it's beneath the surface, right? They're not, great power war is too expensive for everyone to fight. And obviously the Russia-Ukraine conflict shows everyone that like, boy, like even a great nuclear power like Russia can just get bogged down here. So like that's not the way you want to fight this. You want to fight this through covert, assassinations, financial warfare, cyber attacks, espionage, and knocking people off different sort of political ladders. And that's just where we are now. So you have that elite factional civil wars are highly personal wars, right? Literally, there's tiny in-groups all jockeying for themselves. And in that chaos, there's lots of grifting and corruption that takes place. But because those people are national leaders of great power countries, they affect foreign policy, they affect trade policy. And so you have this highly personalized, model of what's going on, as well as this highly abstract kind of macro model of what's going on. And I think because the latter is more salient, you have indicators, you have, like big policy frameworks. That takes most of the attention. And the in-group is what intelligence services focus on, right? Is like, I need to be close to that person to understand, like, where does he sit in this fight? But I think there's an availability bias here, because certain things on the more macro side and the geopolitical side that are obvious are more salient and visible. They draw more of our attention. We think those are the things that matter. But just because you don't see something doesn't mean it doesn't matter. And the whole function of intelligence services is not only to see what most people can't see, but to do things that affect strategic, shifts in ways that are not traceable. That's the whole function of these systems. So, anyways, that's a bit of a riffing spew. Yeah, this is I try to pay attention to the things that are not as visible as well.
I think that we should leave it there, because I think if we start to go down your other professional interests, we're going to overwhelm the listeners. So why don't we put a pin in it there? We'll have you back soon and we can talk about aliens and all those other things. But I think this was a good sort of good first step for the listeners.
Baby steps.
Yeah, baby step. Like you said, we can't scare the client completely by giving them the whole grab bag. We got to give them some treats first. So thanks for coming on, man.
Thanks, man. Next time.
Thank you so much for listening to the Jacob Shapiro podcast. The show is produced and edited by Jacob Smulian, and it's in many ways the Jacob Show. If you enjoyed today's episode, please don't forget to subscribe, rate, or leave a review. It takes just a couple seconds of your time, but it really helps us. Also share with a friend. If you're interested in learning more about hiring me to speak at your event, or if you want to learn more about the wealth management services that I offer through Bespoke or at Cognitive Investments, you can find more information at jacobshapiro.com. You can also write to me directly at jacob@jacobshapiro.com. I'm also on X for now with the handle Jacob Shap. That's Jacob, SHAP, no dats, dashes, or anything else, but I'm not hard to find. See you out there.